Hey, everybody, Dan here. It's been one hell of a week, hasn't it? So we're finally into the weekend, and it's not too early to start thinking about Monday. All right, well, maybe it's a little early, but here I am anyway. So I want to look at Amazon today. Now, all the megas turned out to be like mega sloppy lately with NVIDIA. NVIDIA, Apple is actually better than most. I mean, at least it kind of held in there. But then we've got Meta. Uh, Hell, even NetApp went wrong, even when I mistype. Meta had great earnings, but now that's back down below the 50-day moving average. Microsoft, not really going well for that. Of course, CrowdStrike, which is my favorite chart because I think it's funny as hell, continues to go lower as well. At some point, it's going to find support, but it ain't there yet. Probably next week at some point, though I will say I don't want to get into it here, but the question isn't for a trader. The question should not be where support is, like when a stock is going to find support. The question should be, after I buy it, what can I expect out of it? Because buying a stock at support doesn't mean a darn thing if it just sits around there for a while. What you want to buy is a stock that, yes, you want to get it close to support. You want to get it at a good entry level, but that entry level also needs to correspond. It needs to precede a run that actually makes it worth the risk that you've taken. So on a stock like this, I think, of course, you can listen to Kramer and he'll call the bottom all the way down and acting like a fool in the process. But you don't want to do that because you want to make money, right? So that gets us back to Amazon. Now, this thing took it really bad in the chin this morning, but you can see how the stock traded today. I'm just going to go into my intraday stuff. This is a 5-minute. I'll make this a 15-minute, and we'll put this at a 30-minute. And then this is a daily chart for reference. So you can see the stock really got hammered right at the open, traded down, and gave us that long tail, this long tail here. And then it traded up, and it held through the rest of the day and actually closed pretty close to the top of the day. The close was 167.56. At least that's what I'm seeing now. Let's see when it just get regular hours. Yeah, so 167.90. The high of the day was 168.77. So this had really, really good price action throughout the day. I especially like the way it looks here on the 30-minute chart, which you want to be using this stuff for intraday trading and understanding of what's happening in the markets. So we have intraday here. We've got this flat top on the 15-minute chart. We have a definite volatility squeeze. This is a really, really tight squeeze, right? So that takes me back to the daily chart, because all the stuff that I just showed you, that's like what has happened, not what's going to happen and what you should do about it. What we see here is this was a massive dump, 137.5 million shares traded. Think about that in relation to the job numbers that were created last July, but I digress. So this was one big, massive flush, a big, massive dump that I think probably haven't seen this kind of volume since back here, clear back in 2022. So I look at this, and this is a big flush, and this is my trade. The stock closed here. The high of the day, the intraday high, is 168.77. 200-day moving average is 168.53. So they're basically coincident. I would suggest setting an alert, as I'm going to do right now on my handy dandy little TC2000 tracking software. I would suggest setting an alert right there. You don't have any advantage in buying now. If you bought it at like where it is right now, you get 0.6% potential reward until it tests the top. So wait until and unless the stock breaks out above 168.77, and then you can go ahead and take this stock because it is going to rebound at some point. I mean, all the economy and this and that and the other thing, it's not going to keep Amazon from filling some of this gap. Whether it fills it all and runs on to victory, I have no idea. But I do know this pattern. I've seen it many times before. It's a big, long-handled hammer. Wait for the stock to break out back above the 200-day moving average, above 168.77. Buy the stock, set your stop. I would give it, at this point, I wouldn't give it more than 2%. Literally, if you're buying it on the breakout, you can keep a really, really tight stop on this, because the only reason you're buying it is because you think the breakout's going to make money. If instead the breakout turns out to be a fake out, which could happen if we get continued selling on Monday, then you don't want to be in the stock, because patterns aren't predictors. They're just views of the past. And then you take the experience that you have and the knowledge that you have and apply that to what you see. And then you make an estimate on what you think is going to happen. This is why they call it speculating. It's why they call it trading, as opposed to winning or money harvesting. Okay. If you want to do that, you can't do it on Wall Street unless you're Andrew Left, but we'll leave that scumbag for another day. Okay, that's all I got for you members. I got a long strategy session for you. Check it out. Lots of stuff to cover, lots of stuff to know. Not that many things to trade. This would be one of them for Monday. And if you have not joined Stock Market Mentor, you really need to give me a try. It's 2 weeks for basically next to nothing. I promise you, especially now, this is going to be the best money you ever spent. I promise you that. See you.